couple more jump on. I'm sure we'll have a couple more kind of stragglers jump on. So let me get going on sharing this here. Share screen two. All right, you guys see that okay? Everybody's good? All
Yep.
right, if you guys put anything in the chat or you guys want to talk about anything in particular, please don't hesitate to just unmute and speak up. Certainly, I feel like most of the time on this, I'm mostly talking, but I'm definitely would love to have some interaction. If you guys have feedback or questions, please don't feel bad about interrupting me. So. All right, I think most of you guys know who I am. I've been in real estate since '04, which sometimes when I talk these days, I like feel like that old guy that I hated back in 2004, but here we are. Um, I'm also an investor myself. I also have a property management company, and still my sales team, obviously. And so I definitely feel like I have a pretty good pulse on the market. I do love data, which most of you guys already know. So I started doing this. I don't even know how long I've been doing this now, at least 2 or 3 years, once a month. Um, but even when I was team leader at the office, which was all the way back in the end of 2018, which seems like forever ago, I would do this a little bit at the office meetings. So I appreciate you guys jumping on. I will say that if you guys ever want to see anything in particular, I do love learning new things. And so I'm happy to do some digging and research if there's anything in particular that you guys might want to, um, learn about or have me do some research and digging on for you. Um, so the goal of today, we're going to go over becoming a local economist of choice. We always talk about interest rates, consumer confidence levels, and then jump into kind of inventory and selling trends, both on the national level and also in Central Ohio specifically. I do have a little bit of a conversation at the end that is just around how I'm talking to sellers and buyers right now about, what to make decisions on. Again, I think some of the things that we've done as real estate agents historically to, provide value to clients is just becoming more and more available through, whether it's Chat GPT's, partnership with Zillow, or whether it's just all of the different portals to search from. But I think, identifying the properties for them, not say that there's not still value in that, but I think we have to figure out ways to add additional value. And I think talking to people and explaining the market and giving, your experience is really something that um, adds a lot of value to conversations that I'm having with people. And so I wanted to kind of share that with you guys. So I always say leave this slide in here. I've had it in here forever, but I want to make sure anybody who's new, and just a reminder for those of you that are here, I'm a numbers nerd. I love this stuff. I could go on all day about this stuff, but not all of you are, and that's okay. And I don't think that you have to be that in order to be a good agent. So, my one piece of advice is just to make sure that you pick one or two things that you can know at a deep level and talk about those with your clients. And 9 times out of 10, that's going to be a differentiating factor for you because so many agents are very, very surface level. Um, I think I might have mentioned it last month, but I got a referral for a listing that actually happened to be currently listed with another agent. And they reached out, and like basically the agent hadn't even done a market analysis with them. And so just by going in and doing a simple market analysis and talking about what the highest price sold in the neighborhood versus where they're at, et cetera, was just a huge thing for them. And ultimately, they decided to wait until next year to take their house off the market and relist next year. But it was all because of the conversations that I was able to have, none of which were being had by the other agent. So if you take anything away from it, it would definitely just be that that you make sure that you at least understand the market at some level, um, and be able to talk about, like I said, just those one or two things that you can sound intelligent on, and I think it'll differentiate you from a lot of the agents out there. So interest rates. So I definitely still believe that interest rates are the story. I mean, it's kept a lot of people, obviously, mortgages are in the news right now between the 50-year mortgage conversation, but then there's also something they're talking about called a portable mortgage. I'm very intrigued on whether how they would structure something like that. But the idea is that you could actually move but keep your current rate, which I'm going to be really pissed if that happens because I just went from a 2.75% last year to a 6.99%. So, but I guess you win some, you lose some, right? But ultimately, obviously, that would move the needle for a lot of people that feel kind of locked into their current home because of their current interest rates. But in terms of the trend of interest rates, I think the good thing is that overall the trend is down. Obviously, there's some volatility. There's definitely been some volatility over the last 30 or 45 days after what had been a pretty steady decline downward. Um, Part of the reason for this is the lack of data that we've had due to the government shutdown. So the September jobs report, I think, is coming out Thursday, I believe I heard this morning. So that will be a piece of market moving data for sure. I'm not sure how quickly they'll have the October jobs report done, but long story short, there's definitely been a lot of guessing and volatility in the rates because of the government shutdown, because most of the data that moves mortgage rates tends to come from government data. So whether it's the consumer price index, which kind of measures inflation, to the jobs report. And so it will be interesting to see what happens with this. I think it sounds like this week we'll start to get a clear picture on that. And the reason why that's important is because that impacts the Federal Reserve's decision to raise or lower interest rates. And part of what's happened here in the last couple of weeks is just the fact that because they didn't have the data, they've been looking at other sources of data, and they feel like maybe they're not in as much of a hurry to drop rates again in December as they were before. And so because of that, interest rates have kind of started to go back up a little bit, but they're still, compared to basically the last 12 months. And really, if this chart went all the way back to October of last year, we would see that rates really have not been this low since October of last year. So still sitting in a pretty decent spot.
Hey, Troy,
Yeah.
what's MBA that at the bottom? Mortgage news.
Mortgage Bankers Association.
Okay, thanks.
It's just another one that puts interest rates out, kind of like Freddie Mac. They're usually behind though. So like Freddie Mac and MBA, like they only put an interest rate percentage out once a week, I believe. So that's why you can see the orange and the black line are a lot smoother. And then Mortgage News Daily, per its title, they put one out. Actually twice a day they come out with a rate update. So Mortgage News Daily is definitely the most accurate on the short-term basis. But as you can see, I mean, all of them kind of run together because they're basically based off the same thing.
Okay, thank you.
Yeah. So I know we've talked about this a few times over the last few months, but I've started to definitely see correlations with buyer activity based almost more so on consumer confidence than interest rates. Now, I think the interest rates definitely drive consumer confidence, but I actually think that consumer confidence is probably a better indicator of where the consumer is at and their willingness to make big decisions. Um, and so it's very interesting to, I feel like, to look at this and see that we can probably see some future trends from this. So one thing that really sticks out to me is, remember back in 2021 and then early 2022, the real estate market was just going crazy, right? Like, it was the craziest it's been on the positive side in terms of pricing for me in my 2021 years. Um, but if we would have been paying attention to consumer confidence, we probably would have been a little bit more prepared for what was about to come in 2022. And remember, this drop in consumer confidence was already happening before interest rates dropped. And so that's what me digging into the consumer confidence data has really kind of opened my eyes to, is that sometimes, not sometimes, many times, this could absolutely be kind of a leading indicator. I haven't done enough research yet where I'm able to come to that conclusion, but I think it's something we need to keep an eye on, because look what's happened over the last 12 months. And I think we've felt this. Now, obviously, the interesting thing is they do all consumers, and then people that call themselves independents, they're trying to take the politics out of it. Um, but I do think there's really no arguing at this point that the consumer is feeling very low confidence levels. So whatever your politics is irrelevant, but the average consumer is not feeling good about where the economy is right now. And so you can see that broken out in a kind of a table form as well. So last year, after the election in December, we saw the highest that we've seen over the last 12 months. We saw consumer confidence, the index at 74, which is the highest it's been. And then it's kind of slowly dropped off. It bumped up again in, what is that, June, after kind of the everybody freaked out around the tariffs, although it was already coming down, honestly, pre-tariffs, but tariffs in April definitely created like a floor, at least for that moment. And then things kind of got better over the summer. And then now we're actually at the lowest level we've been all year. And so if we jump over to this, it really um, has a lot to do with prices. So, um, they did obviously a good job. I guess people felt like Trump was going to lower prices. I would love to actually go back on this, and I know it's on the site and I should have done this, but just thinking out loud, it looks like last year in November and December, the average consumer felt like pricing was going to increase by somewhere between 2.5% and 3%. And now that expectation is all the way up to 4.7. You can see that when the tariff thing happened, people went crazy. And a lot of this, remember, is based on feeling, right? But the average consumer was feeling like prices were going to go up 6.5% year over year, but then only 4% like 5 years from now. So you can see like the long-term expectations have kind of dropped back down um, after the tariff scare. But the short-term expectations, people still believe that prices are going to go up. And when they think that prices are going to go up on everything else, it doesn't give them the warm and fuzzies about pulling the trigger on a higher mortgage payment, right? Because that's what they have control over. And so I think this really sums up, in my opinion, even more than interest rates, why I forget who commented in the chat about buyers being unwilling to make decisions. This is definitely something that we're keeping an eye on. Now, the interesting thing is, if we see this start to spike back up, then it's probably a precursor that things are about to get better. The only good news that I see from this chart is that it seems like we're really low um, compared to where we've been over the last like 10 years, which we've had a lot of bad stuff. I mean, COVID specifically was just a terrible time. And the idea that right now things are worse than COVID, um, is are kind of mind blowing, but I guess, I'm not sure. I'm not sure how to wrap my head around that, but it's the reality. And so the good thing is what you see from all of these is that very rarely do does consumer confidence stay low for a long time. And it's true of recessions in general. Like people, they tend to bottom out and then bounce back pretty quickly. So hopefully that's what we're dealing with. All right, jumping into real estate numbers. Active listings continue to be up year over year, but you can see that overall they've definitely flattened out. So you can see pre-pandemic, we definitely saw inventory continuing to rise throughout the fall typically, and then level out. I guess not typically. Sometimes it did. Sometimes it was a little bit more level. Sometimes, you know, but we're definitely in a pretty flat market right now in terms of overall inventory month over month. Again, year over year, we're still above last year, but you can see last year we were slightly rising all the way through November, whereas this year we've basically been at this level since July. So that to me, from an overall perspective in the market, makes it feel like the overall national market is really starting to probably level out a little bit, and sellers are just choosing not to list their house, and that's what's causing the inventory, because we know that there really aren't that many new buyers entering the market. And so that is what we're seeing. So even though inventory is really high, you can see that the number of new listings were slightly above last year this month, but you can see they've kind of been going back and forth. Um, so we're definitely seeing more new listings. But what you'll see from the local data, because I don't have this on the national level, is that I think some of that is definitely driven by new construction, meaning more builders are listing their houses online on the MLS. And so that's causing some numbers to jump up a little bit and probably creating enough of a gap between last year and this year that that's a lot of it. But we'll take a look at that locally here in a few. This is just total listings. I'm not sure this is like super relevant, but this is taking the active properties and then also adding in the properties that are also already in contract. So those are up as well, which you would expect. Um, Pending sales are down slightly, but you can see it's pretty much been a long time since we were up. So we'll see how that goes as we enter the end of the year. And then days on market, the overall median days on market nationally is 63 days. That's +5 from last year. We're definitely not that high here in Columbus. However, we definitely, again, things kind of bumped up quite a bit in the spring and then have somewhat leveled off, although they've continued their upward trajectory. But as you can see in a normal year, like you can actually see it was following these trend lines and then it kind of cut over to flatten out a little bit. And so it'll be interesting to see if we see more sellers taking their houses off the market, or if we see fewer sellers coming into the market. But that kind of remains to be seen. Median list price, I mean, it's crazy how resilient this has been. So even on a national level, and again, this is list price, not sales price. But I've just been shocked with all the negative news that we've still continued to see a pretty stable pricing structure. And I think it's still just because inventory levels are not where they need to be to start to push down pricing. Even though it's really the softness in the market is really driven by the number of buyers that are not in the market more than it is the number of sellers that are in the market. And so we're still seeing situations. I mean, I have an offer out today on a listing that has 5 offers. And so it's like I have some listings, including a personal investment property of mine that's sitting on the market and hasn't had any offers, in 40 days. And then I've got buyers putting offers in on places that, have competition of 5 or 6 offers. So it's just, it's really definitely as a whole, the Columbus market has definitely slowed down, but we're still seeing pricing stay pretty strong when we look at it year over year. Number of price reductions definitely in the top tier, but no longer highest in terms of the years. So that is something that we've continued to see uh, kind of level off. You can see that actually this year, the percentage of listings that have had a price reduction actually dropped. And I think a lot of that is just due to sellers becoming more realistic about where they're pricing on the front end. And then also not losing their mind freaking out when their house doesn't sell in 1 week. There's still sellers out there that are doing that, but I think it's less and less common. And so people just know, hey, we have to take a breath. We have to let some showings happen. We don't have to rush to the bottom from a pricing perspective, but we also have to be realistic on the front end. Regional comparisons. Again, we are seeing pretty stable and even slightly increasing pricing in the Midwest. Northeast is, pretty similar. The West, we're definitely seeing the most softness at least when it comes to list price, but still no big negatives. I mean, you can go on YouTube and find people that were saying that the bottom was going to be falling out, and I'm sorry, but 2.6% off the median list price is not a crash. That can change pretty quickly. And I still believe that if we saw interest rates on a national average drop below 6, you would see some buyers rushing back into the market. Because I think a lot of the consumer confidence issues that we're dealing with have to do with affordability. And so if you saw a pretty big drop in interest rates, I think you'd see buyers rush back in, and making up 2.6% is not going to be a difficult thing to do. And the reason for that is that inventory is still super low, and we've talked about that the last couple months with regards to how many buyers are in the market versus sellers. It doesn't take that many buyers to re-enter the market to turn the market back into, a seller's market. And in some ways, technically, it still is because there's only a couple months of inventory. All right, local market. We're going to dive deeper into this chart here in a few minutes, but highlights are the number of homes for sale was up 26% in October compared to last year. New listings only up 6.4%, but they were up, whereas in September, they were down a little bit. And then the solds in October were up 5.3%. Again, I think some of that had to do with interest rates dropping there in September, that we saw a little bit of a bump in activity in October. We'll see if that trend can continue, because that's definitely a good one, and somewhat unique. Although I guess back last year in October, the solds went up and then drop back down in November. So this is a couple months in a row of increasing new listings. And why that's important is what we see here. If we look at last year, I'm about to sneeze, I apologize. If we look at last year, we can see that new listings were like on a free fall this time of year. And I would say in normal markets, that's very true. This is the blue line here. I mean, you can see that it's flying down all the way until it bottomed out in December. Look at this. Now, I don't think that we've bottomed out in August, but certainly to have new listings going up in September and October is very, very bizarre. And you can see that the pendings, which is the red line here, that also followed the new listings down, which again is a fairly normal phenomenon. But you can see that the pendings in September and October were were higher than in August. So either August was just the anomaly, or there's something, interesting going on. And again, if we go back to the last slide, we didn't see quite the increase in the overall market as we did in Dublin. So you can see this is Dublin schools. So definitely something I'm keeping an eye on. I did a little bit of extra digging here, and there were 16 new construction homes put on the market this October, and there were only 11 last year. The increase in new listings was still, I mean, it was, 27 homes. So definitely doesn't, make up for all of it. But what is that? 20% of the increase came from new construction listings. So that's something that like was a hypothesis of mine that maybe in Dublin and Hilliard and Olentangy, that that's what was causing it, but it doesn't appear to be the only reason. So I'm definitely curious, if you've personally seen anything and you're on here, please interrupt or raise your hand or whatever, because I'd be curious. I'm a little bit baffled, to be honest. Um, Hilliard schools inventory was up 88.8%. New listings were up 37 units. And again, this is over last year, last October. Solds were down. So when you have new listings up and you have solds down, that's obviously going to lead to more inventory. Um, but you can see last year, they did see a little bit of a bump in September, but then a pretty sharp decline. And this year, like October was just wild in terms of new listings. Now in Hilliard, it was partly, I mean, 50%, over 50% of the new listings, like the difference, there were 20 new construction listings, and there were only 5 last October. So that's definitely playing a role in Hilliard, larger than it did in Dublin, but still a lot more existing homes. I mean, so that's 15 extra new constructions, but that means there were still 22 extra units listed, even outside of the new construction increase. So very interesting. And then lastly, Olentangy schools. Now, this is where it becomes really interesting. So, Olentangy schools, this is where the overall market comes in. So, Olentangy schools had 38 new construction listings, which was 18 more than last October, which is significant. But in Olentangy, new listings were down 0.6%. So, there were a lot fewer people listing their home in Olentangy this October when you take out the new construction listings. Um, but inventory was up big still, which is kind of wild. So, and I actually have, this is not correct. It was not down 8.3 month over month. It was up 4.7. So sorry about that. But yeah, you can see, I mean, look at the inventory in Olentangy schools compared to last year. So if you're listening to anything in Olentangy schools, be cognizant of that. So, all right. Does anybody have any feedback, any comments, personal thoughts or experiences on these wild swings in new listings in the suburban districts? No? All right. Well, we've talked a lot about new construction and resale, so I don't want to, I feel like we beat those numbers to death. Um, the sales price to original list price. Now, remember, this is before a price reduction. So this isn't saying that everybody's reducing their price by 4%. It's saying that that's off of what they listed at, which could have been unrealistic. So that's leveled out. At 96, so hopefully we can stay there. It looks like last January, we bottomed out at 95%. So at least we're not the lowest in the last 18 months. Average days on market was 30, which we didn't see that number until December last year. So definitely seeing, a little bit more softness, as you guys already know. Months of supply, though, is still just that two, um, which is wild. And this is what I mean by, I think we don't want to, not say that we want to put our head in the sand about this, but we still do have very low inventory compared to a historic basis. But the trend is obvious, right? Like it's definitely been up. So whereas last year at this time we were kind of like bumping around, this year we've definitely gone up, and it all started in April, which isn't abnormal really, from a seasonality perspective, but it's definitely been up. New construction's definitely a little bit more volatile, but closer to 3 months. Average sales price. So I don't know what's going on with trend graphics. Like these things are so hard to see. But our average sales price, for listings was up 2.8% in October, and our sold price was still up 2.6%, and it was up 1.1% from September to October. So this we did have a very big drop. So if you look at last year, you can see that in the fall, it was kind of like a steady decline. And this year we had this huge drop between August and September. I was a little bit nervous about that last month because obviously that could be the beginning of a big price decline, but it looks like it was just kind of a little bit of an anomaly. And we don't usually see like bumps up during the fall time. And so I think a lot of this just had to do with there were several properties that sold in September, or something weird was going on in September that caused that to happen. But then average is always average, right? And so I think that it's probably more of like the steady fall decline is really what the numbers are telling us. All right, showings. So we are seeing more showings. However, I think that that's really driven, and we've been talking about this for a few months, by just the smaller number of buyers looking at more properties. Oh my goodness, did I get rid of that slide? Bummer. Or is it in here? Sorry guys, let me see if I can find that. Here it is, and then I'll go back to those. The showings per listing though is still below last year. So what that tells me is buyers are just looking at more properties, per buyer. It's not the showings, the total number of showings isn't telling us that more buyers are in the market, unfortunately. All right. Well, I think we've talked about a lot of this already, so I don't want to beat a dead horse, and you guys are super quiet today. So I don't know if I'm boring or if I'm really good or if you guys are just sleeping or all of the above. But I just wanted to quickly talk through what my conversation is from a seasonality perspective. So when I'm talking to a seller this time of year, obviously the things that you're taking into account are kind of, twofold. One, is price the most important thing to them, right? That's the first thing that you have to decide, because some people just need to sell, right? Like some people just have to sell for one reason or another. Maybe all of the money that they have is tied up in the house. Maybe they're moving out of town. Maybe they're going through a divorce. Maybe somebody's passed away. Whatever that is. I mean, when those types of situations come up, they don't always have the ability to wait until spring to list their house. But let's assume for a second that someone doesn't have to move, but they want to move. Then the second question is, are they moving up in price point? Right? So if you're moving up in price point, so the first thing that we want to talk about is that obviously, if we use the number of properties that go into contract each month, which is the pending number, we can see that the number of buyers in the market, if we use the pendings to equal the number of buyers, it's going down if you went back and looked at years past, you would see that every single year, starting in about July, that the number of buyers in the market starts to decrease and it slowly drops off all the way until it gets to December. Now, the new listings you can see don't typically fall as much. Now, I know we're only looking at 1 year, but typically the new listings still are a little bit higher. That's what causes the rise in inventory at the same time, right? It's an inverse relationship. Buyers fall off, the number of listings on the market increase. Once we hit November, typically, we start to see clients, and if you've been in the business for any amount of time, you've heard it. If we don't sell by X amount of X date, then we're going to take our house off the market for the holidays, right? So this is where we start to see inventory drop. Now, buyers are still dropping. So inventory isn't dropping because there's more buyers in the market. The inventory is dropping is because sellers are taking their house off the market. Now, if we saw new listings dip substantially, it could be due to that, but it's mostly due to the fact that people are taking their house off the market. Then I always say these are the people that are going to give you a deal, usually, right? They're the people that, in spite of the holidays, they need to sell their house. So that's why oftentimes you see the inventory levels in January and December to be pretty equal to each other. Not always. Sometimes, obviously, here there was a little bit of a drop off, but for the most part, you're going to see that those inventory levels are going to be pretty similar to each other. And then what happens is starting in January, the number of buyers starts to increase again, right? At the same time, the number of new listings increases. How many people are like, hey, I'm going to wait till after the first of the year to list my house, right? Now, the thing that I always tell sellers to look for is you can see that even though the number of new listings is increasing, the amount of inventory is still decreasing. And the reason is because there's more buyers coming into the market than there are new listings most of the time. And so you see that there was a bump in buyer and new listings in January, but then the new listings dropped off in February because everybody that wanted to list after the first of the year already did. And then buyer activity keeps going up. And so I always tell sellers that this time of the year is going to be the best time of the year to list your house, right? Somewhere, if the weather breaks in late February and it gets warm, buyers come out as soon as the weather breaks. So if it gets warm in late February, we usually see an earlier start to the spring buying season. If it stays colder later, usually that's a little. But I always tell people the sellers and the buyers start thinking about real estate at the same time. The problem is that when they call Stacy and they're like, hey, I want to sell my house, she comes over and gives them a laundry list of things to do to get it ready. And so they don't end up coming on the market until April or May. That's why we see new listings peak at this time. We also see buyers peak at this time, but the problem is if you're listing the same time that the maximum number of buyers are in the market, you've already missed the market. And so now you start to see buyers trend off. And that's why we see in these 2 months, I need getting like overzealous here with the drawing. That's why we see in these 2 months, the amount of inventory on the market jumps a lot. And then we see it continue to rise because now the buyers are starting to drop off, right? So what does all this mean? Basically, what it means is if you're a seller only, the best time to list is sometime between the end of February and the end of March, depending on weather. That's when we have the most buyers and the fewest competition in the market, right? If you're a buyer, you want to be in the market right now. If you're a buyer only, the best time to be in the market is December. Why is that? Because everybody who wasn't serious about selling took their house off the market. And so you're left with the most serious sellers and you have the least amount of competition in December, right? Now, what if you're a seller and a buyer? Well, the first question is, are you moving up in price or down in price? If you're moving up in price, then I always tell people, well, Mr. and Mrs. Seller, if we went back to our average sales price conversation, if you're going to lose 5%, I'm just throwing out a number, by listing in the fall versus listing in the spring, because this is our average sales price, so is the seller of the house you're buying. So if you save 5% on 300 on the house that you're selling, or if you lose 5%, you lost 15,000. But if you're buying a 600 that drops by 5%, for those of you that can do math in your head, you've gotten 30,000 off of that purchase. So if your whole goal is to be in a better position on your next home than you are on this one, it's actually better to still go ahead and list in the winter because you're moving up and the savings on the purchase is going to make it worth it. Now, obviously, if you're going down in price, then it's the complete opposite, right? You should wait until spring. But I always tell people if you can find something to buy in December that you love, you should absolutely buy it, right? But obviously the only other downside to being a buyer is that you also have the fewest number of properties to choose from typically. I mean, here this year February was actually the bottom of the inventory, which isn't, but it's pretty close, right? So you're going to have the fewest number, and a lot of these houses that are still on the market in December have higher days on market. It's what's left over, right? But there are people that do list during that time. So that's my conversation with people right now. Obviously, people, there's no guarantee about what's going to happen in the spring. Like prices could go down more, but it doesn't, so far, the evidence doesn't support a big drop in pricing. So the benefit of having more buyers in the market definitely puts you in a better spot. And here's what I'm going to tell you. As a commission salesperson, if you walk into the house and tell them that it's in their best interest to wait until spring, they no longer think that you only care about getting paid. They actually believe you are the consultant that I think almost all of you feel like you are and strive to be. Um, and so when you tell people that they shouldn't do something right now, even though it's in your personal best interest that they do, you gain so much respect. And it's going to be very difficult for them to go anywhere else, even in the spring. And there's nothing to stop you from signing a listing agreement for spring right now either, right? So anybody have any thoughts on that?
I don't know if it's a thought on that, Troy, but I went on a listing appointment yesterday, fully knowing that they weren't ready to list. Super hoarded, and I've done enough of these to see where some people take net seller sheets to the first meeting and some don't provide that until after they have the listing. But I knew I don't want to lose it, but at the same time, I mean, I'm sure I over delivered for not getting a signed agreement, but I asked them how they felt with, everything I did, and they're like, "Well, we're not ready to sign an agreement, but," and I said, "Okay." I said, "Well, what if over the winter I can work this and use what we've done today to get you an off-market buyer?" And they're like, "Yeah, that's good." So I don't know. I guess some advice on how to approach that. Because what I did end up doing was I paid for the bougie Cubicasa 3D tour thing because they're hoarders. So I was able to show them their property decluttered the way that I asked them to start prepping over the winter. And they were like, "Oh my gosh, that looks so good." So yeah, just any tips on how to still try to get that signed, because I mean, they could interview another agent next week and sign with them. And here I've given them a fully comprehensive net seller sheet, a full floor plan. I mean, I didn't send them that. I just took like a video of my reaction to it, and didn't send them PDFs or anything. But just advice on how to secure your listing agreements now, even when we're telling them the spring is a better time to sell.
Yeah, I mean, I would the first thing I would say to that is I would have asked the second question, which was going through your mind, but you didn't say out loud, is what's holding you back from signing a listing agreement today? Or and maybe you did. And if you did, what did they say?
I did not ask that. They did sign my buyer exclusive agreement, and we did see
Okay.
a home that day. So it was actually one of the funniest moments ever during the buyer showing. They're like, "Well, do you want to come over?" It was the weirdest thing. I was like, "Am I being prepositioned right now?" Um, so yeah, I don't know. I think I was like, "Okay, stop while you're ahead. You already got one signed. They said they want to look passively." I felt like I was laying the groundwork, but now I feel like I set myself up for a loss potentially.
Well, and I would say from my experience, and this is a complete guess, but I would venture to guess that maybe what they're thinking is they don't want to do anything to prepare their house. And I'm sure they've gotten the letters in the mail about we pay cash and you can leave everything type of conversation. But I think, I was on a mastermind last week, and that was one of the things that came up. And basically, like, I think if you haven't been doing or maybe never did because the market was different, like a pre listing questionnaire where you ask, are you interviewing other agents, and find out all of those types of things. I mean, the cash for housing, conversation is definitely something that is still alive and well. And I think as the market slows down, if anything, it might even become even more um, prevalent, especially for those types of homes where the sellers think their house is going to be difficult to sell. And so being able to present them with an option of the fact that you can still offer exposure to the house and get them more money, even if it's a hoarder house, than they're probably going to get by only working with one person. Because that's what most of them do, right? They have the wholesaler come over and the wholesaler just sells it and the wholesaler now makes money. So I think sometimes explaining the wholesaling process to somebody like that is worthwhile. I would just, say something like, out of curiosity, it sounds like you're not ready to sign an agreement. Out of curiosity, have you interviewed any other agents? And they might say, well, no. So what's holding you back from signing with me today? Is there something I didn't answer for you that I should have? And eventually if you go deep enough they're going to be honest, and my guess would be, well, like there's a lot of work to be done here and we're just not sure whether we want to do it. We've gotten offers about paying cash. And then say like, well, out of curiosity, are you aware of how a wholesale deal works? I know they're not advertising it that way, but can I explain to you what typically those postcards in the mail that we buy cash or homes for cash, what they're doing, and so educating them on that. And I mean, sometimes people are just going to go that route, but I think, you probably have a couple investors, and if you don't, within our office, we can probably come up with something. If, like you said, if you sent something out and said, hey, I have a house, that's you could be the wholesaler for them. You're earning the commission still, but you're not taking more off the top like the wholesaler is.
You know what I
Um,
think it is now that you're going through this? Number one, I was afraid to ask the question, which makes me laugh. But number two, I think these last few years, this whole office exclusive thing, I always had an agreement before I utilized office exclusive. So I think, and maybe chime in, Stacy, now, this 3D rendering that I did decluttered their whole house. I mean, it is freaking sweet. I'm
Yeah,
like,
that's
guys,
cool.
you don't have to touch it now. Like I will literally use this. And so now I feel like I can go to them and be like, hey, I can actually market this now, but I do need that agreement signed. So totally understand if you want to wait. But if you want me to work this over the winter, I mean, this is pretty cool. I can't do anything with it right now until you tell me I can, until you sign that I can.
Yeah. I think just asking more questions to make sure. I think, what I heard out of that mastermind last week was that a lot of more people are coming up against competition on the listing side, even when they're getting referrals and things like that. And so I think we just have to be careful to not fall into the mindset that we've been in, where I think sellers are seeing houses are sitting on the market longer. And so they're taking the time to interview more than one agent more than they were before. And so, whereas before, I think we were kind of like, yeah, let's just assume that they're only interviewing one. Most of the time they are, and then we'll get it. I think we always need to assume that they're interviewing multiples and make sure that we're asking those pre listing questions so that we can come in more prepared for what their objections are. Um, but yeah, just ask more questions. I mean, I was so shy when I got into real estate. It's taken me 20 years to be able to ask those questions. But I found that just asking the difficult questions gets to the bottom of things so much faster. And most people, as long as you're like professional, most people are fine answering sensitive questions as long as you're respectful about the way that you ask it. So, but I'd be curious, does anybody else have anything to add to that scenario or anything that maybe you would have done or have done differently? No? All right. Well, really quickly, um, purchase applications are up a little bit. You can see that ever since rates went down, they've kind of started to stay above this level, which I'm not really sure what this index number is because there's no key or anything on the side, but up more is better when it comes to purchase applications. So you can see back here, when rates were higher, it was kind of below this 7.2 line, and then now it's spent almost all of its time in the last couple months above it. So I think that's a good thing. You can see that the refinances have definitely been even more pronounced in terms of an increase. So again, we'll continue to see, but we haven't seen a huge movement. This is that chart that I've talked to you guys about the last couple of months. I won't spend too much time on that. And then the rental market, definitely seeing some extra competition in the rental market, especially in certain areas. But overall, I would say that our market is fairly flat from the perspective of, kind of in line. I mean, -$5 year over year is not a significant change. So we haven't seen a huge softening, but I would say definitely the corporate renters, or the big apartment complexes are definitely offering more incentives and different things like that. So if you have investors, just be cognizant of that. Although we're moving, if you go into contract now, you're going to be a listing after the first of the year. That's when things start to pick up again, just like in the sales market. Um, so yeah, just be cognizant of that if you're coming on the market. So, and those are the sources that I'm always using. You guys have any other questions, concerns, comments before we jump off?
Thanks, Troy.
Yeah, you're welcome. Thank you guys always for coming. And concern. What are you
Is
concerned about?
Trend Graphics free?
Trend Graphics is free if you're in. I didn't hear who asked
Sorry,
that.
Tyler.
Um, Tyler, if you're in our consultant's office, yes. Are you in our consultant's
No,
office?
I'm in Indy.
Okay. Yeah, so our office pays for a subscription. There's quite a few cool things out there. I'm not sure how much an individual membership is though, because we've just
Okay.
always had it. but it is
Got
a
it.
cool, it is nice data for listings for sure.
Yeah, I was just curious where you could pull all that from so quickly. Yeah, those were nice.
All right, awesome. Well, you guys have a great rest of your day and week, and I will be doing this at some point. Usually it's the second or third Monday of December, so I will see you guys next time. Have a good one.
Appreciate it.
Bye.